Good afternoon, everyone. Welcome back to the commodities update video. Today we'll be looking at natural gas, UNG, gold, silver, and the US dollar, as well as oil. So I'm back from traveling, so I will be doing videos again regularly. So let's get started. So we'll be looking at natural gas, net gas first. We'll be looking at support and resistance levels, as well as the most likely scenario where price will be heading into later this week. All right. So a week ago, I talked about this resistance and this. So that's the support, and this is the resistance, and we're already in an equilibrium. So when we break out of that, we'll likely have a big move. So we end up breaking this on the bear side. So we got a lot of volumes falling through on the bear side. You can see it increasing a little bit of volume as well over there once we broke out of this support. And we came all the way down to pretty much the next level of support. So you can see this broadening channel here. So this is resistance, and that's the support. So that's the two I will be currently looking at, because you can see we have, when we broke out of that, you can see we pretty much rallied into the resistance. Same thing. Prior resistance, prior resistance, prior resistance, now acting as support and support. So that's the textbook where prior resistance now acting as support. So let's delete this one. And now we'll be looking at this channel to see if the bulls can take it back up to pretty much top up range of this channel. So that'd be about 9% away. So the most likely scenario, if we do break above 3.25, you can see all these resistance at 2.35 here, as well as we're currently testing the teal looking line, which is a 12 EMA on the daily time frame, which also acts as resistance. You can see rejection here once, prior support now is resistance. Resistance over here as well. So prior support now acting as resistance because we are below it. And we're also below the 200-day moving average, which will also act as resistance at the exact same spot. So if we can get over the 200-day moving average and the 12 EMA, then there's a good chance we'll come up to test this 3.38, which is the upper range of this sideways channel here. So we come up, break that, and then we break the 3.45. Well, we will test this downtrending resistance. That's the last level resistance we have to get over, and we're probably going to drop within this zone until we get some kind of daily uptrend confirming, because we have not seen daily uptrend confirmed ever since, let's see here, ever since over here. So initial move, the pivot being set, breaking above the pivot. So that was a daily uptrend. There's one right here as well. Initial move, pivot being set, break above the prior high. So that's a daily uptrend confirming. Ever since then, we don't have any. This is just one straight move, and this is also we haven't confirmed it since. So if we can get, let's say, a pullback here, and confirm daily uptrend, ideally near this resistance, then we have a chance of breaking above it. Let's say we come all the way here this week, reject from it initially, pulls back slightly, shallow retracement, and set a pivot and break above that. That'll be the most ideal scenario. But usually, the least ideal scenario for bulls would be us pretty much rejecting exactly where we close today. That's the 12 EMA as well as the 200-day moving average. Let's see if we're still in a bear flag territory. So we are above the bear flag territory on the daily. Because we're above 0.382, that means we have negated the bear flag. So if we did close below 0.32, then we're still in the bear flag territory, but we have negated that. What we want to see is the bulls getting over 0.5, which is the 50% retracement for potential trend changes. So the higher we go, the more retracement, the more likely scenario when we retrace, we can confirm a daily uptrend. Because if a shallow bounce, then when we pull back, there's no room for us being set that pivot, because we'll just give it all back. So what I want to see first step for the bulls, get above 50%, and as well as get above this 12 EMA for us to potentially even consider this last resistance over here at this downtrending resistance. For bears, bulls can't get over this 3.25 and this 12 EMA, then bulls aren't going anywhere. So those are the two scenarios that you guys are looking at. And yeah, so big picture, we're going to be chopping within this zone overall. All right, let's take a look at the hourly. So hourly looks good. We have an hourly uptrend confirmed today. Initial move. Now this pivot being set. This move have broken above the prior high, so that's an hourly uptrend confirmed from the bulls. And you guys know how I always talk about hourly uptrends are the first thing we want to see for both sides. If you're a bear or a bull, you can see right here when we topped out, we had an hourly downtrend confirmed right here, and you can see we have follow through from that. And over here, we never confirmed the hourly uptrend until down here we bounce off of support, confirm our very first hourly uptrend. We just waited for hourly trends. You can miss the initial move, but overall, you won't get faked out. There's a big drop. Sometimes it's good to be a little bit patient, but natural gas is a little bit harder because his tendency is to just swing all the way to the other side and then come all the way down to the other side, and then does it again and again. You can see all these swings. So we'll see if it continues to do that into our new channel of area. All right, let's take a look on the weekly. Yeah, weekly is also very choppy as well. It's just that channel. Monthly, you guys know I always talk about this for a while. Still a big bear flag. And you guys can see if we measure from the top to the bottom, we're not even close to 20% retracement yet. So just a big monthly bear flag. But for something like this to play out, it's going to take a really long time because monthly candles are, you only get one candle per month. So we don't really have to worry about that as much at the moment. So we'll look at the daily and see if where it breaks out of this range. We'll know very clearly if it breaks out of this on the bear side, it's going to be increasing volume on the bear side. And if we break the bull side, we're probably going to come up to test this one. It's going to be a while before we break this one. So we'll update you guys when we do. And yeah, so bulls, if I were a bull, I would set my stop loss below Friday's low, because if we break that low, we're coming back down to 2.96. And the last thing we want is to just come all the way down and then it forms a new channel down here. And that's the last thing the bull want to see. If I was a bear, it's good to take profit down at this channel because now this prior resistance now is acting as support. So we'll see if it comes back up here. Look at UNG. UNG is a tradable ticker for Nat Gas. All right, let me delete some of these lines. There's quite a bit going on. We had this equilibrium as well, breaking bear right here on this downtrending line, break bear, and we just went through as well. Very similar to Nat Gas. And now we are trading in a similar channel. It's like a falling wedge, but so this was prior resistance and now acting as support. We did have one day of a fake out down here below it, and we hit that 6.31 support, which is this last level of support here, and bounce up back into the wedge. And use these sideway lines as visual guides because you can easily just adjust this. Anyone can draw it differently and it would just be always off. So only the horizontal orange ones are more definite supports and resistance. See if I can just adjust this a little bit and it will still look like a support, right? Resistance, 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 and now support. So people like to draw it in the wicks. People like to draw it outside of the wicks. So all these diagonal lines are always visual guides for the bigger picture. And these sideways lines are the definite because I can't really go wrong with the sideways horizontal support and resistance. So yeah, so pretty much the similar idea with Nat Gas. So we're very likely going to be just chopping within this channel. And we're coming up to test this 6.78. We'll see if we can get above that. For UNG, 12 EMA is not really acting as resistance because he's not as aligned as Nat Gas. So if we want to look at it, just look at Nat Gas for the 12 EMA. And if we do come up above this, we're definitely going to test this resistance because this is a strong prior support, 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 It's going to act as resistance now when we come up to test this. So if net gas can get over its 12 EMA and come up to 3.37, then UNG has a good chance of testing this $7 resistance up here. So we can do that. Look at oil. All right, so oil bear break on the equilibrium. Haven't taken a look in a while. So this was the equilibrium. Equilibrium means it's the tightening range. See big move up. Every time the move gets smaller, 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 and then we had a bear break out of that pattern. And it looks like we were just chopping around here for a while. Let's see here. And we broke below. Back down all the way to test the 200-day moving average. Bounce off the 200-day moving average. And now we're just bear flag. Let's see on the 2-day time frame. Weekly. Yeah, it's looking like a weekly tightening range as well. Big move up, big move down, smaller move up, gets smaller and smaller and smaller. Let's see if we can draw one here. Oh, that's not bad. All right, delete this one. So we have a bear break out of this smaller tightening range here. Now we're back to the bigger tightening range. So big move up, see the move down is smaller than the prior move. Move up is smaller than the prior move, and it will just get tighter and tighter. Looking like we are probably going to trade within this range for a while. And of course, hourly trend will be our guide, the short-term time frame. If you're a swing trader, make sure to look at the hourly time frame. So we confirmed an hourly uptrend here, and it's a very initial sign where we get a bounce from. That's what bulls want to see. So hourly uptrend is an uptrend, but daily, weekly, and weekly is also in a downtrend. So weekly in downtrend, daily downtrend, and 4-hour downtrend, but hourly uptrend. So that's just the very first step bulls want to see is the hourly uptrend, but doesn't mean they're out of the woods because every trend is still in a downtrend. So what bulls want to see now is to break above this teal looking line, 12 EMA. You can see we have not gone over it, pretty much rejected. 7 days over there. The first thing is big enough bounce, get over that 12 EMA. Then we'll have at least about a 7% bounce, where the next pullback, we have enough room to confirm a daily uptrend. So if that confirms, then we'll likely come back up to test this $75 range. If the bulls can't do that, then we're probably going to head back lower because this is a daily downtrend, still intact. I'm probably going to test the 200-day moving average again. So we'll see if the bulls can show up or not. Otherwise, the bears are still in control. All right, let's take a look at gold. Okay, so last week I talked about gold where we are testing this key resistance level. This black line, you can see is prior support, 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 support goes all the way back to last year. So that's a very strong level of support. When we broke out of it, you can see that bear volume came in all the way back up to it, testing it. So it's now acting as resistance because we're under it. Looks like we rejected that area. I also confirmed a daily downtrend as well here. We're getting a little bit more follow through from the bears. But now this 1940 is a level of support. As you can see, all these wicks, upper wicks, resistance, resistance, support. That's like a 10 days of support right there. Also support here, support there. So now when price comes down to it, it's going to act as support. So we did bounce today. That doesn't mean the bulls are out of the woods because trend is still in downtrend. If we do get a big enough bounce here, then we have a chance to confirm a daily uptrend. But as of now, we don't even have an hourly uptrend yet. This is just initial big enough bounce. That's it. First step I want to see is bulls confirm an hourly uptrend, meaning when next time we pull back, we need to break the new high, just like this one here. Bounce, pivot being set here, Bulls needed to break this prior high right there for it to confirm hourly uptrend, but it failed, so it rolled over. So that's why trend is so important. Doesn't mean you just have a big bounce. Is it on an uptrend? It's not. So anything here, big bounce, still not in an uptrend yet. So if the bulls cannot form a pivot and form an uptrend, probably just going to roll over it like well just here. Same thing over here, big enough bounce, never confirmed the trend, roll over. Same thing over here, big enough bounce, couldn't confirm the trend, tried to bounce, and then rolled over. No hourly trend has ever confirmed it on this drop, so no fake outs here. And we'll be looking at that, see if it confirms the hourly uptrend. If not, bearish side still going to be in full control. Let's take a look at the US dollar. So we drew this megaphone together like 4 weeks ago, maybe a couple, I don't remember, but resistance, support, and it looks like it's still in it. So you can see we rejected from here like 7 times, bounce off here about 7 times, and it's just going to continue to trade within it for a while if it doesn't break out of it. Hourly trend. Let's see here. Hourly trend is choppy. It's in a neutral. Yeah, it's in a neutral trend, so that's not going to help us. But as long as we know it's going to trade within the megaphone, we know where it's going to be. And let's take a look at. So we have a big enough bounce now where bulls can confirm a daily uptrend now. We'll have to see if they can or not. Because they're still rejecting from the tail looking line 12 EMA. You can see use the X as support. Now it's acting as resistance over here. Also, we have the CPI data tomorrow. If we get a soft CPI data, we're probably going to get the dollar rolled over, going a little bit lower. If we get a little bit of a harder CPI data, then the dollar might spike. So we'll have to see how CPI data comes in tomorrow, because that's an inflation data. And that will determine if bulls can confirm a daily uptrend or not. Right? Let's say we get a hot CPI data, meaning we may just get a spike up, and that's a daily uptrend confirmed because this is the pivot being set. And if we do break above this Friday's high, the pivot, daily uptrend will be intact. If we get a down, and daily downtrend is still intact. Actually, initial move. Nope. Daily uptrend is not currently in a daily neutral because we haven't confirmed downtrend yet. So that's the pivot being set. If we get a stake spike down, break below this low, that's a daily downtrend confirmed. Even though this is a huge drop, I haven't confirmed the trend change yet. Just one initial move. This is the pivot being set. And now bears need to take it lower than this. Bulls need to take it above this. So we'll see who wins on the daily trend. But there's bigger picture. This megaphone will be our guide until it breaks out of it. All right, silver. Silver, similar idea to gold. Slightly weaker, but it looks like it bounced off of its $22, $0.2 support. Support. Came down below it, but came back, bounced back above it. And bigger picture, same thing. This is downtrending resistance what we're looking at, and this is the sideways support. So big picture, silver will be trading within this triangle overall that we've been looking at for a while. But let's see if silver holds this 22.2. If it does and bounces it with gold, then we'll likely come back up to test 22.9. Then that early trend will be our guide. So it was only an initial big bounce. Same thing with gold. We want to see the hourly trend change. We don't want to see just fake outs. These are all just big bounces, and then that's it. Fake out, fake out. We don't want another one of those. So we want to see a trend change, pivot being set, and go higher for us to believe this bounce. Currently, we can't really believe this bounce yet, so we'll see how it goes. All right, that's a call for you guys for commodities. I will do the stock market of the video right after this one, so make sure to check that out. If you look at QQ, S&P 500, NVIDIA, Tesla, Apple, Amazon, Google, Microsoft, and Meta, make sure to check out the next video. And feel free to subscribe, like, and share if you guys have made it this far. And I'll see you guys on the next video.